Howdy, y'all. Welcome to Liberty Call. Today is Wednesday, January 18th, 2023. Hope everybody's having a fantastical day out there. Pretty ugly day in the markets here in the United States. Looks like a lot of the selling accelerated in the last little bit. Dow Jones was down over 600 points. It was down 200 to 400 points most of the day. And then, like I said, the selling really accelerated. It looks like it was across all the major indexes here in the United States. See a little more green as we head into the early part of the trading day, and and then the overnights in Asia. But anyways, hope everybody's having a good day. It is snowing here in Colorado. I probably got I don't know, maybe 6 inches of snow on my driveway. Not as bad as they were saying. They said it could have been as much as a foot. I'll take 6 inches just because it's that much easier to clear. But, the snowblower does most of the work. I do have to shovel a little bit and brush off the vehicle. But, at least my wife's car's not here right now. It's sitting at the airport at DIA, and I don't have to deal with that because you pull all the snow off, and then you got this big pile around your car, this nice little snowbank that either you have to move the car and then get the snowblower out and, clear off that part of the driveway, or you got to shovel it, which not fun to do at all. All right. Well, if it's your first time watching, give me some thumbs up, likes, shares, subscribes. Send me a note, drop me some comments. I'd greatly appreciate it. I'd like to hear what people are thinking out there. So let's go ahead and jump into the numbers and see how things turned out today. Like I said, the Dow Jones was down 613 points, or 1.81%, closed at 33,296. SP 500 was down 1.55%, closed at 3929. NASDAQ down 1.24, closed at 10,957. Small caps were down 1.56. The VIX was up 5.06% today. It's currently back over 20, which again, that's the caution light. Anytime we go over 20, between 20 and 30 is, that's a warning. And, volatility is starting to creep back up again. It's currently sitting at 2034. Canada was down 0.4, Brazil up 0.83, Mexico up 0.23. Earlier today in Europe, Germany was basically flat at down 0.03, UK down 0.26. Looks like France's markets were closed today. The Euro Stoxx was flat at 0. Same thing with the Netherlands. Looks like their markets were closed today. Spain was up 0.48. Italy up 0.27. Switzerland down 0.31, maybe because of all the weirdos in Davos. Maybe they're bringing the feeling of the markets down there. And Portugal down 0.5%. What's up, Jake? Squeaking on me. All right. Let's see. Both Russian exchanges, the Russian exchanges were mixed. MOEX down 0.03. The RTSI up 0.35. The overnights in Asia, Japan was up 2.5%. Australia up 0.1%. China, the Shanghai was flat at down 0.01. The SCSE component up 0.09. The China A50 down 0.36. DJ Shanghai down 0.06. And the Hang Seng up 0.47. Taiwan weighted came in up 0.04% for the day. So much more mixed across the markets across the globe. But like I said, not so good here in the U.S. You would think with the good news that came out with the producer price index coming in with better numbers than expected, that the market would have really taken off, but not today. All right, let's go ahead and read through today's market recap. Stocks fall after data showing a cooling economy. Hang on, I got to blow my nose here for a second. Let me mute. All right, I'm back. All right, U.S. stocks were falling on Wednesday as investors studied data that showed the economy was cooling. Oh, who could have figured that out? Retail sales for December fell more than expected, giving investors hope that Interest rate increases by the Federal Reserve wouldn't have to be as aggressive as they were last year. Holiday sales rose 5.6%, but came in below analyst estimates. The market has already been betting that the Fed's next rate move would be smaller than the moves it made last year, with the expectation being a 0.25 percentage point rate increase in February. Adding to the hope that inflation is waning, producer prices also rose less than expected for the year. Later today, the Fed will release its periodic beige book, which is a collection of observations by officials in each of its regional bank districts, with commentary on business activity and economic conditions throughout the country. Microsoft's shares fell more than 1.2% after it said it was cutting 10,000 jobs and taking a $1.2 billion charge as it braces for slower revenue growth. Moderna shares rose 2.5% after the COVID-19 vaccine maker said it had success with older adults in a trial of its experimental vaccine for RSV, a contagious respiratory virus. Again, I don't know if I trust any of these drug makers, but hey, your body, your choice. You can do whatever you want. I'm just not sticking that crap in my body. Charles Schwab stock fell 3.7% after it fell short of expectations for fourth quarter earnings. Again, not the best day here in the U.S. So let's go ahead and look at the producer prices numbers and see how they came out. The U.S. producer prices fall more than expected in December. U.S. producer prices fell more than expected in December as the cost of energy products and food declined, offering more evidence that inflation was receding. The producer price index for final demand decreased 0.5% last month, the Labor Department said on Wednesday. Data for November was revised lower to show the PPI rising 0.2% instead of 0.3% as previously reported. So, hey, some more good news. In the 12 months through December, the PPI increased 6.2% after climbing 7.3% in November. Economists polled by Reuters had forecast the PPI dipping 0.1% on the month and gaining 6.8% year on year. The report came on the heels of news last week that monthly consumer prices fell for the first time in more than 2.5 years in December. Inflation is subsiding as the Federal Reserve's fastest interest rate hiking cycle since the 1980s cools demand for goods. This could allow the U.S. Central Bank to further scale back the pace of its rate increases next month. Again, wishful hoping. Please don't raise rates anymore. I can't take it. You're killing my growth stocks. Sorry, some of those growth stocks are going to be kaput and out of business when the market falls apart. That's just my prediction. It happens every time the market collapses. You're going to have all these high flying companies that were, the belle of the ball, and then all of a sudden when the economy falls apart, they're crap, and there was nothing really there behind the scenes. All right, a 1.6% decline in price of goods accounted for the drop in the PPI. Goods which gained 0.1% in November were pulled down by a 7.9% plunge in energy and a 1.2% drop in food prices. Hey, two things that we actually use. Services prices edged up 0.1% after rising 0.2% in November, excluding the volatile food, energy, and trade services components. Producer prices gained 0.1% in December. The core PPI advanced 0.3% in November. In the 12 months through December, core PPI rose 4.6% after increasing 4.9% in November. But again, where was it up here? PPI increased 6.2%. Year on year through December. So again, producer prices still are up 6%. It's not like they were up year on year like 0.5%. Then we'd be like, woohoo! We'd be all excited, but that is not the case. So again, it's good news, but let's look at it from the other side of things. Things are still a lot more expensive, and if we totaled up all of the increases, from like say March or April of 2020 through today. I mean, we're probably up 15-20% on most things, if not more. So, all right, let me close that and go to our last article here. U.S. retail sales post biggest drop in a year. So again, we had some good news that costs are not rising as fast as they had been, but at the downside, retail sales are falling. So this is probably why the market reacted so poorly today, is because the people out there, the prognosticators, are probably looking at this saying, "Oh crap, we're in trouble. We're headed towards recession or something bad." But anyways, U.S. retail sales post biggest drop in a year. Inflation is retreating. U.S. retail sales fell by the most in a year in December, pulled down by declines in purchases of motor vehicles and a range of other goods, putting consumer spending and the overall economy on a weaker growth path heading into 2023. The second straight monthly decrease in retail sales, which are mostly goods, is undercutting production at factories. Manufacturing output recorded its biggest drop in nearly 2 years in December, while monthly producer prices also tumbled. Other data showed on Wednesday. The widespread signs of weakening demand and subsiding inflation are likely to encourage the Federal Reserve to further scale back the pace of its rate increases next month, but not pause its monetary policy tightening anytime soon as the labor market remains tight. The U.S. Central Bank is engaged in its fastest rate hiking cycle since the 1980s. Quote, consumers are likely retrenching during a time of economic uncertainty, end quote, said Jeffrey Roach, chief economist at LPL Financial. Quote, the trajectory for the economy is weakening and recession risks are rising for 2023, end quote. Retail sales plummeted 1.1% last month, the biggest drop since December of 21. Data for November was revised to show sales decreasing 1% instead of 0.6% as previously reported. So again, some bad news there. Economists polled by Reuters had forecast sales decreasing 0.8%. Retail sales rose 6% year on year in December. Retail sales are not adjusted for inflation. December's decline in sales was likely part the result of goods prices falling during the month. Holiday shopping was also pulled forward into October as inflation-weary consumers took advantage of discounts offered by retailers. A cold snap in December likely chilled sales, especially at restaurants and bars. Lower gasoline prices, which impacted on receipts at service stations, also helped knock down sales. In addition, spending is shifting back to services. Even accounting for distortions, higher interest rates have raised the cost of credit, which many Americans use to finance goods purchases, eroding retail sales in recent months. Sales of auto dealers fell 1.2%. Receipts at service stations tumbled 4.6%. Online retail sales dropped 1.1%. Furniture stores sales plummeted 2.5%. Receipts at food services and drinking places, the only services category in the retail sales report, fell 0.9%. Electronics and appliances store sales declined 1.1%. There are also decreases in clothing sales as well as receipts at general merchandise stores. But sporting goods, hobby, and musical instrument stores eked out gains, as did building materials and garden equipment suppliers. Well, probably the building materials is probably because all the prices of like lumber and the stuff that you buy at Lowe's has come way back down. So, you know, the home improvement DIYer like myself, I got some tasks I got to do here around the house real soon. So I actually knocked one of them out earlier today, fixed a spout on one of the guest showers. And but anyways, that's probably why they're doing a little bit better. And plus people are, you know, spending money where they're getting good deals at this time. So all right, so that is everything I wanted to cover in that article, and that is everything I wanted to cover for today. If anyone has any questions for me or anything they want to talk about, please go to dsafinancialgroup.com. All my contact information is there. You can book a meeting, drop me an email. You can even call me if you'd like. Phone's not ringing. Anyways, but like I said, if you need anything from me, please go to my website. All my information is there to reach out, or you can just drop me an email. You can see my email address right here on the screen, r.dahlman@dsafinancialgroup.com. And hope everyone has a fantastical evening. I will talk to you guys next time. Adios.